while government raised 6.96 billion cedis via Treasury bills, the biggest so far this year. That's according to the T-bills auction by the Bank of Ghana. Interest rates also fell again for the sixth week since the start of the year. Joining me is Patrick Edem Agama, who is head of trading at Republic Securities. Patrick, how significant is this? Is this 6.96 billion cedis raised by the government? We are told it's the highest so far. What is driving this surge as interest rates continue to fall?
Well, good afternoon to you, Daryl, and your viewers. It's quite significant. Anytime the government collects more, actually the government will have to collect extra more to pay for interest and principal. So we are seeing what is happening now. In November last year, we're seeing a lot of oversubscriptions in some of these auctions. Now, this is the effect we are seeing. They will have to actually collect more. The short-term maturities for this week was about 4.2 billion, but they collected 6.85 billion. So it should tell you that the next maturity, they will have to actually collect more to be able to finance these particular short-term maturities.
How sustainable, though, is this borrowing spree by the government on the treasury market? I mean, we are told the government is expected to borrow about 180 billion Ghana cedis via treasury bills in 2024. How is this healthy for the government? What are the implications for the government, do you think?
Well, the sole reliance on the treasury market here is not going to be sustainable if they continue this trend, but we are expecting other confidence in the external bond market or even the domestic bond market to be able to give them more chance to be able to access more funds. For this era we are in, they even expect to pay 5% cash coupon on the new domestic debt bonds next week. So they even have to collect more. And even if you look at the maturity schedule, you see that from 26th February and even the first week in March, they will have to also cough out a lot of money to settle these maturities. So there's still a lot to do, and we hope the confidence is restored fully to the market so the government can be able to finance these maturities.
But on the whole, how did the auction fare on Friday?
Well, we saw all the three bills dropping by some basis point. The 91-day dropped to 27.99, dropping by 30.16 basis points. The 182-day also fell by 35.55 basis points to close at 30.44%. Also, the 1 year, which is the 364-day bill, also dropped by 39.99 basis points to close at 30.99%. We expect this trend to continue because the pricing guidance system is working. So we expect the downward trend to continue for some time.
Well, let's turn to the stock market. Tell us how trading ended on Friday. We understand Unilever and Farm Milk were the gainers for last week.
Yes, they led the market, gaining 10% and 1.45% respectively. We also saw a dip in Das Pharma by 10% value. They lost about 10% value. We are again seeing Unilever and Farm Milk seeing a lot of interest that's on the buy side. There's still interest on the buy side, so we expect them to rise again in the coming weeks to come. But also on some banking stocks like Car Bank and I'll say Societe are seeing some sell side pressures, and we expect this to also continue for some time.
Well, speaking of banking stocks, we are also expecting an increase in the share price of Access Bank this week. Tell us what's happening there and what your forecast is.
Well, with regards to all that's happening in the global market, with regards to what happened also in Nigeria, with regards to the passing of the group holding, there has been some interest in Access Bank. We don't know why this is actually rather keeping interest increasing in the bank instead of the other way in other advanced markets. What we see that if there's a loss or something happening, we see the share price actually moving downwards, but this one we are seeing interest rather mounting in this equity. It also came out from how it became a news the weekend about the passing of their group CEO. So maybe the sympathy to that stock is actually rising in this market as well.
Yeah, like you point out, you'd expect that news of the death of the founder, Herbert Wigwe, would have caused an upset sort of on the stock market, but like you point out, it's rather the opposite. How normal is this, if I should ask? And is it just for the time being, or you think this is sustainable?
Well, I think it's for the time being. By the time the fourth quarter or the full year performance of these banks start coming in, we will actually see the real movement of these stocks. You know, there's still some restriction on dividend payment by these banking stocks, which is not good for this market because we have a lot of dividend investors in this market. So we don't expect this news to have too much effect on the stock.
All right. Patrick Edem Agama, Head of Trading, Republic Securities. I appreciate your time.